team at Gryphon Capital are all experienced investors with an excellent number of contacts across the industry. The three partners each have over 20 years of experience in all the major securitization centres around the world. They've worked for various firms, including asset managers, investment banks and advisory businesses. They have witnessed firsthand and have had to react to at least 3 major stock market crashes in their time, each with differing causes and effects on the securitization market. In securitization markets, the ability to see the micro detail as well as the larger picture is key, and Gryphon's bespoke platform allows them to do this. Gryphon's data condenses all of the details that loan originators send to Gryphon on a monthly basis. This includes areas such as borrower occupation, loan type, loan to value ratio on a historic and dynamic basis, arrears rates, loss rates. Once Gryphon get all of this, they can extrapolate the data and predict quite accurately future loss rates. The team can then compare this to the actual returns offered to see if it offers good value, both in isolation and as part of a wider portfolio. The real value of databases like this in the world of secured credit is their size and age. The more data that you can get into them, then the more accurate the output can be. This helps to drive better investment decisions, and Gryphon's data set goes back pretty far. Aside from the fact that they've managed to stay together for over a decade, what really impressed me about Gryphon Capital is that after they were spun off from Threadneedle, that Threadneedle maintained their services to manage their entire secured credit portfolio. I think that this speaks volumes about the levels of skill and expertise required to manage a portfolio of this size, and really validates the value proposition that Gryphon offer. Do your research on secured credit, what it is, what drives it, what the different terms mean, what tranching is, and what credit ratings mean. Although investors are buying into a trust which will have exposure to mortgages and car loans, for example, what they're really buying is exposure to the managers. These are vastly experienced individuals who have spent the time, money, and effort building the infrastructure that is required to be able to run a secured credit investment fund. They are able to analyze lots and lots of data to find the best value and rewards across all of the secured credit spectrum, and to then act on it. Remember that to date, because of the inherent credit protections built into the structure, there have not been significant defaults, if any, of this asset class in Australia. In summary, the trust offers what should be a rare opportunity to participate in a stable, income-generating product that is rarely available to retail investors in Australia.